MAO, shall we? All right, guys, good morning to you once again. This is Cal. This is the 26th of April, Monday. All right, let's start our morning MAO right now. All right. Okay, all right. Now, whenever everyone is on one side of the market, now I think you heard me saying this many times. All right. Yeah, indeed. It's a morning to you, Kelza. All right. The thing is this, when everybody's on one side of the world, right, or one side of the market, especially in the financial market, you really need to be very careful. Now, let me say this upfront here on recording because I don't want you to misunderstand me. But, you know, the last few weeks, all right, since I think since early March, from February onwards, February and March and, first 2 weeks of April, in fact, I've been saying that, right, the market will be going higher. And I also say that, right, likely is that, right, the amount of funds is available in the industry, in the market. The Dow Jones will go up to 34,000, and really it came in. So today, on the 26th of April, all right, I would like to remind you and inform you that be very careful the next few days, because I suspect that, right, unless there's another influx of funds coming into the industry, into the market, if not, is that right, we may actually see a correctional pullback. Now, the magnitude to me is about 4 to 8%. I repeat, about 4 to 8%. It won't be big unless something terrible happens. Okay. Now, why do I say that? Because I suspect that right now, with everybody on one side of the market, usually the opposite will likely happen. All right. So of course, this is not the first time I say this, but definitely it's all right. All the weeks I never really reminded you, but today, at early morning, as early as this morning, I'd like to remind you on this. Okay. Now, likely, where the funds will be going, right? Some of the crypto counters, stock counters, right? I will be talking about them tomorrow during Super Tuesday. I think those stock counters that's related to cryptocurrency or even NFT will be good highlights. So tomorrow, Super Tuesday will be very good, in my opinion, because I'm going to show you a lot of some very incredible stuff that is outside, TWB teaching, all right, in terms of, right, the economics, all right, of the world. And also why some stocks is right, in my opinion, could be going higher during this time. Okay. So tomorrow, Super Tuesday, for all my TWB students, please be around. Okay. 2 p.m. That is our time. Okay, guys. Okay, let's start now and continue. Right. So later in the MAO part 2, I will tell you why so many investors are on one side with hard fact and figures, obviously. And I'll tell you that where are we right now in terms of the vested interest, and of course, why am I pretty concerned? Because actually I spotted that there are a lot of insiders are actually cashing in. All right, they're cashing in while the rest of the world are going in. So which means that, right, they're cashing out of the market while the remaining investors are going in at this level here. So that's why I want you guys to be very careful. All right, so this is a joke of this morning. You can see that this is Joe Biden, supposedly. So Joe Biden actually is in a bar, and basically the bull is telling Joe that you are killing me. Now, we know what he means by that, because apparently Joe Biden says that he wants to increase the tax to 40%. And of course, also on capital gain. So that's why there is some unhappiness. But of course, a second report came in yesterday on Friday that the number eventually will be lower, right? Later I'll cover on this. But anyway, Joe Biden is right. It's not killing. To me, it's just pulling back. Now, do note, right? When I say that the market will correct, it's the due correction that's been long time. Okay, that's very normal, because you need the market to pull back first, then we become cheap enough for people to come back in again. Okay, you understand my point, right? So I'm not saying the market will crash. I'm saying that the market will pull back, and then after that, maybe at the cheaper level, you can go back in to buy again. All right, so that is what I'm trying to explain here itself. So hopefully you don't get me wrong. All right. Okay. So the thing is, that's why to me it's all right. You don't need to waste time explaining to people who just couldn't understand, because what happened is that we have seen it before, that from Warren Buffett, what we learn from history is that people don't learn from history. So if history is a form of guidance, all right, maybe at this right now, we have to be very, very careful. Now, I'm not saying that the market will crash again. This is my second time saying this, but I'm saying that a pullback is a high possibility. So as long as the rules allows you or informs you, then you do what you do. If you want to buy, you can choose to wait for a while, let the good pullback come in, and then you buy from cheap. Just like when Bitcoin hit 64,000, when many people asking me, Kel, can we buy Bitcoin right now? I say no. I say let it pull back, come down, let it go down. So when people tell me, say at 55, is it cheap? I say no. History show that it will go down to 50 and lesser. And apparently it really happened. All right. So that's why my point is this. You really need to let the history remind you guys of something else. And then we just make sure that when the thing happens, we just follow through. Okay. That is the reason why I'm sharing this. Okay. So do note again, every day I have the morning MAO, in the afternoon I have the afternoon MAO. Okay. So just take note of that. And of course, today, Susan, yes, our very own Susan will be assisting people who wants to set up this Binance account. Now, do note once again, if you have already have Binance account and you know how to do cryptocurrency, that is fine. We have already prepared something for all TWB students, which is a e-learning portal to learn all about cryptocurrency. Right? It should be ready within these few days, and you can log in and you can watch the video created by Winston. Okay, it's about 7 to 8 different videos to briefly inform you how does cryptocurrency really work. Right, so if you think that you want to wait for that e-learning, you wait for that. If you think I'll come down to the office and then get along with Susan and she'll share with you. Now, this is the first time Susan doing this. So of course, please give her all the support, give her time. She's a very good coach, just that she's just too soft. All right, so just be nice with her, talk to her. She will be able to deliver. In fact, she went to train under Winston a few days ago just to make sure that she understands this better. All right, so support Susan. Make sure that you guys don't disturb her, okay? All right. Now, disclaimer as usual before we start this morning, all right, any form of trading, okay, do note, all right, is on your own self risk management control. All right, I cannot be liable for anything. So please understand this disclaimer. If you're staying on, right, the next 5 seconds, okay, it means you have identified me. All right, 5, 4, 3, 2, 1. Okay, thank you, guys. No need. Eugene, no need to write a disclaimer. Okay, long time never come already, is it? About morning MAO. All right, morning, Mandy. All right. So let's go to some global news first. Okay, now, first of all, J&J vaccine is back. Apparently, right, US has lifted the pause on J&J COVID vaccine, clearing way for states to use doses. All right, so apparently now, after some investigation, the CDC advisory community has allowed this thing to continue. So all I can say is they have done their FDA, CDC review, and of course, consulting all the medical experts and recommendation, they think that it is good to go. So I will just leave it there. I will not say anything further. So you guys know exactly what's happening right now. So you just make sure that you make your own decision if you are using any other vaccine. Now, the thing is more important is Procter & Gamble and Coca-Cola became the latest company to announce that price increases are coming to help offset rising commodity costs. Now, I've been saying this and I said this long ago. I informed you guys that, right, we will see inflation coming in. So just a few months ago, when I talked about one-ton meal hit $5, right, people laugh at me. They say that, hey, come on, man, it won't happen. Well, if you actually walk around now around your town area, you will notice that now most of one-time meat is at $3.50 to $4.50 already. Very, very soon, by end of this year, I'm going to see $5 as a minimum. I tell you this. Why is that so? Because when you pump in so much money into the economy, but the people are not there to really facilitate that, the cost will just have to increase. In fact, itself, right, you can see that now even Coca-Cola, all right, is doing that. They're informing you we're going to increase the price. So it's just a matter of time. Now, of course, when they increase price, does it mean revenue will go up? Well, it is possible. So that's why the thing is this, all right, do note, right? Apparently, like example, like you can see like paper towels, jars of peanut butter, sales of consumer packaged goods rose 9.4% to 1.5 trillion last year, right? Now think about this, 9.4, and Federal Reserve say that it's less than 1.4. Now again, Federal Reserve, the number they're having in is based on non-food and non-energy, all right? So you cannot compare that. But still, you can see right now, right, they're expecting the price to go up further and may gain by 4%, all right, by May, all right, just based on 1 year ago. So all these things are increasing in prices. So what does it hurt us? Obviously, it will hurt the consumer. All right, companies may increase revenue because of that, but again, if consumer are not really buying it, then we have a problem here. So what I said is really happening. So will that bring that, right? Will the yields be going up soon? Well, in my opinion, it will pretty soon, all right? Now, what is really, really dangerous right now is India, especially. Apparently now India has, their cases is going at very alarming speed. In fact, now India has become the second highest infected country, right? So the thing is that now they're increasing at 300,000 people having that COVID every single day. And the problem is it's continuing because you know why? There's not enough medical support down there. And what happened is, I think if you watch my Facebook, I think that was some reason because they celebrated something, there's a religion, and so no, I won't go near there. But that causes a problem, and the outbreak really, really spread across. And now we have a problem because now they're running out of beds, they're running out of oxygen. All right. Do note this is where the concern is. See that the government faced criticism because it let its guards down, allow big religious and political gathering to take place when India cases plummeted below 10,000. So below 10,000, they say, okay, never mind, things should be okay right now. And then now it's at 30 times more, 300 plus thousand people getting sick per day. This is really very scary. And of course, that means that, right, a lot of our foreign workers can't go back, and obviously they can't come in. So what will happen? I think you can understand this. Prices for foreign workers from this particular country will definitely be shooting up again. So that's the reason why you can see around our surrounding, right, our areas now, you do see our grasses, the straws are all blooming because, lack of the manpower. So this is whereby it will cause a problem, because if India basically get into serious economic trouble, then there will be a spread down. All right. So that's the reason why I'm saying that be careful. That is one of the reasons. Okay. All right. So last week we have seen Coca-Cola, P&G, and all these companies, they have given their earnings and they are pretty good, right? Pretty good. Today, nothing much. Okay. But tomorrow, wow, we have a big one like Google, Caterpillar, Boeing, AMD, Visa. All right, these are the big ones on tomorrow. And then Wednesday, we have Facebook, we have Qualcomm. All right, we have Federal Reserve. Obviously, they're going to say nothing to this, and they will just say that, okay, fine, unless you're going to give a huge shock to the market. Then upon on Thursday, we have Amazon. All right, McDonald's. All right, this is the one, Master. And last one will be on Friday is Alibaba and Chevron. All right, so this is what to look out for. This is going to be a big week for traders. You need to watch out for this. And the following week will be the one that everybody watching for will be Microsoft, PayPal, GM, Tesla, and Square. Okay, that's next Wednesday. All right, so not coming Wednesday. Yeah. Okay, so we have big people coming in. So traders stand by. All right. Okay, so let's look at the US market for Friday. Friday, once the stock market opened, it went all the way up in. So it was like the day before was down, the next day is up, the day after that came down again, and the market was. It says that basically the market is basically going up and down, clearing. So later on in technical analysis, I'll tell you what's my personal take on how I see from here. All right, the interesting part is that toward the last hour, interesting, usually you're close near the high, right? The last hour, there was some selling. So that is something that to watch out for, the last hour. Okay. All right, so let's look at the market report. Now, S&P rebounds more than 1%, ends the volatile week flat. It was a flat week, in fact. I'll show you a chart later. So because there is some concern that, right, there will be a judgment on the capital gain tax. So apparently now they are saying that, right, there is a possibility that Biden eventually, with the Congress, will likely bring down the increment to about 28%. So that's the reason why the market started to buy back in again. And of course, again, many people say that, all right, since this is going to be good, this is going to help the economy, people is positive. So everybody says, okay, let's go back to buy mode. All right. So that is whereby a lot of houses are still very optimistic and they believe that this will bring the Dow or the US market even higher. All right, so in news form now, everybody is still pretty positive. Overall itself, right, they are still thinking that Apple, Tesla should be able to bring up the market, which is like, you know, their earnings this week and next week. And of course, there is some selling in Bitcoin, and that is whereby people are speculating that maybe because of selling on Bitcoin now, the funds will go back into the equity market. So this is what people are saying. So I'm going to give a question mark here. So we understand that this is possible, that maybe from the funds of big cryptocurrency move back to the equity market. But then those companies who are using or basically bought a lot of this coins, then what will happen to their bottom line? So again, this is a bit of a very balancing beam here right now. But still, something concerned is how Intel came off on Friday. So I'm going to put a question mark here on the technology company because I'm not that comfortable when you see yields are going up itself, right? That means that the technology company, they will have their bottom line being hit. They may be doing well in terms of quarter earnings, but in terms of forward earnings, right, that is a big concern here. Okay. All right. So let's just take a look at what happened on Friday. A quick review on Friday. Now, Friday, we saw the market. Now, this is the yellow, red, yellow, red, yellow. So this is it's a zebra formation. Now, in the zebra formation, I told you guys, we should see big upside or big downside soon. All right. So my choice is that I think that the market will have a bigger downside than upside. Why do I say that? Because, like I say, everybody is on one side of the market itself, right? And everybody's so bullish, right? I just express my concern. But of course, I can be totally wrong, all right? So my point is that the KSI also, you can see that it was still green, but there was some lowering on KSI. So how we are traded on Friday? Well, the market opens here, right? You can see that. So initially, the market went down to P1 first. Now, P1 was an inverted pivot. All right. So when you say inverted pivot means that, right, the market is super sensitive. So when the market touches the P1 and fail to go down and recover, this is whereby you really have to buy. And of course, what happened? The market really went up. All right. Now, incredibly, there's a lot of KCB right here. All right. And you can see that the last few days, the market just get restricted over here. So it was quite clear that, right, even though the market is supposed to go up, all right, but because of all the KCB here, there's some form of resistance, and I suspect that this will continue for a while. So that is my personal take on Friday. Let's look into details. Now you can see that same thing again. The entire day, the market just sweep around the opening price. Then when the cash market about to open, you see the Dow come off. All right, now when it came off to pivot one, right, the market just stopped there perfectly as if that they know that pivot one exists. It doesn't close below. And immediately the CCRY kicks in. Now, CCRY triggered pivot one is definitely a buy, right? So that is where you will buy here. Stop loss place it here. And of course, this will be your X factor. And the market easily gives you the X, all right? And you can see at the back, the KSI was all green. So that basically facilitated the buyer upside. So end of the day, the market went all the way up to KTR plus 2, and that was whereby it stayed on for a while. So it's very clear that, right, the market is just basically playing itself, moving around at the second half of the day. In fact, in the morning, the market hardly is moving recently. So that's why traders, I'm going to express my concern is that these few days, let's be very careful, all right? I really want you to be very careful with the market these few days, all right? Just as a friendly advice, okay? All right, I see that there's about 83 of you guys online right now. Okay, so you got my point. Okay, yeah, good. Let's just look at the market, shall we? Here we go. Now this is the long-term chart of the market, right? I'm still using my same channel, just show you the conventional. You can see that the market is still moving very strongly, so there's no reason to concern. But let me just open up for you. But the thing is, this traders, right? You can see that the moving average is still climbing because of the market not moving much the last few days. So mathematically, the average will pull it down, and the MA is moving higher. So which means that we are very near to a point whereby the market will touch the MA soon. So what does it mean by the market touch MA? So what I'm trying to say is this. If the market do come down to the MA 30, okay, for today it's roughly about 33,650 area. Now, if the Dow Jones get supported at 33,650, I suspect that the Dow will go up again. Okay, it may go and test the all-time high. All right. Now, if the Dow Jones fail to hold the 33,650, my personal take is that the market will pull back down for between 4 to 8%. Now, 4 to 8%, where am I based it from? I'm based on the highest point. All right, highest point. So that means that if you look at the mode of them, it's about 5%, right? The middle of them, 5%. So if that's the case itself, right, at the moment now, using the all-time high as a guidance, all right, the 5% marker is here. The 5% is at 32,545 to be precise. Okay? So what I'm trying to say is this: now the Dow Jones is at 34,000, right? As of now, it's 34,033 level at the current price. That means that there is a possibility to see something like this. Now, of course, again, you may call me a pessimistic. You may say that, you know, I'm too bearish. I'm just being upfront here. Okay, I'm just informing you that if there is going to be any pullback, the magnitude will be around 32,545. Now, once we reach there, what do you think will happen? In my opinion, if the market do go there, it might be a good chance or good time to buy into the market. Yeah, you heard me correctly. I just said that it could be a good time to buy into the market because, as we know, the Federal Reserve just want to come in to support the market. And of course, I don't think any administration want the market to pull back down, right? So this is one part of it. The other part is that, right, if let's say the market hit the 5%, all right, by the time this happened, the MA 200 will be still moving up, right? So what I suspect is that if there's going to be any craziness because of some profit taking, if the market do hit the MA 200 and stabilize there, I think that will be a lovely price for you to buy up again, all right? So I'm trying to say is that we have two potential. Either the market going to hit the 5% mark and rebound, or the market may go down to the MA 200 and rebound. So I'm basically telling you that, right, regardless which type they go, all right, I'm more looking towards the buy at the 5% mark or at the MA 200. Of course, it has to constitute that they actually hit that level and then get supported and rebound. This is very important. Huh? I hope you guys understand this. If you understand this, please key the word understand. All right, I want you guys to understand what am I trying to say. All right, I'm not asking you to sell the market and then expect the market to crash. No, I'm saying that, right, if the market pulls back down to the 5% mark or the MA 200, it might be a lovely time to look to buy into the market. If you understand what I say, please key the word understand, all right? Right, thank you guys, thank you guys. Good to see so many people understand what I'm trying to say. Great. All right, so that is clear. Let's just move on. Thank you. Thank you to all of you guys. Now, the weekly chart is what I'm trying to show to you now. The weekly chart shows that it actually closed flat in a way, down. All right, so that is not a very good sign for to begin with, okay? So that is the reason why today, theoretically speaking, the market is now opening below my so-called steep 35 degrees angle or 45 degrees angle trend line. So usually when this happens, right, the algorithm, the usual algorithm will be actually looking for sell signal. So the sell signal will be what we use to look at it is the low. The low of last week is at 33,685. So I'm going to tell you this up front here. Take note of this figure, 33,685. Now, the Dow Jones now is still trading at 34,033, right? So which means that if the Dow Jones do come down, watch out for this point here. If the market stabilizes above this, the market will rebound. If the market goes below this, likely it will trigger some algo selling. All right. Right. Can you see something like this? Yeah. This is what happened. You see that? The last time when the market was surging higher, right? When the market broke the low, all right, okay? When the market broke the low, the market triggered some selling, and that selling was about 500 points. Yeah, about 500 points. So you can see that, right? I draw this again. Can you see that now? The market was going up, okay, for weekly chart. Once it broke the low, it triggered about 500 points. All right, see that again? It happened before. All right. You see that again? It happened before. So it seems to be telling me that, right, whenever the market broke the weekly chart, right, especially a low, it does send a ripple down of about 500 points down. Okay. So if you look at it right now, right, 500 points from here will give you about 33,000 level. Okay. About 33,000 level. So that's why I suspect that this may actually happen. Okay, traders. All right, cool. So, well, we can take a look further. You can watch out the market, but do note that, right, based on history, the last few times when the market break the weekly low, the market do trigger a 500 points movement. So traders who are looking forward to buy from the bottom, this is some of the numbers to look out for. For traders who are opportunists, they want to look to sell the market and then make the money to buy from the bottom is another way too. So traders, all these numbers, kindly take note, all right? Okay, yeah? Okay, thank you. All right, continue. So let's look at today's market, shall we? For the TWB chart. Okay, now for TWB chart today, we have another inverse pivot. Another. This is really incredible. We're not only having a zebra, we have another consecutive inverse pivot. So what does it tell us again? Inverse pivot means that, right, both points will be very, very sensitive. So which means that either the Dow later on will be going towards 34,178, or the Dow might pull back down to 33,721. Now, of course, the upside is about 140 points. The downside is about 200 points. So by theory, to go up is higher. Now, the KSI is green in color. So again, if the market stay above OP, mathematically, in terms of statistics, the chance of the Dow going up is higher. All right. The only thing that I want you to take note is this point here, my friends. This is a very important point. Look at it. This is the TSCB. Now, the TSCB is a new indicator that I created this year. And I tell you, the accuracy is incredible. The TSCB, the TA for the day chart TA is 33,810. So as long as the Dow Jones stay above 33,810, you can see that for the last 4 trading days, anytime the market touches there, the market will rebound, right? So this is a very important technical point that I keep on repeating myself, and you can see that if you just strictly follow that, you are able to make a lot of money. So if the Dow Jones do pull back later, do watch out for 33,810. If it hits that point, stabilize and rebound, then you know what to do already, okay? So remember this number, 33,810 level, okay? Cool. All right, I'm gonna write it down for you. Important level for Dow is 33,810. Okay, it's a very, very important level. Okay, all right, cool. Huh? Okay, so that is the Dow Jones. Let's look at the Nasdaq. Now the Nasdaq also displayed the same thing. Went down, went up, went down, went up. But overall, the upside seems stronger. All right, so that's why overall it's still okay. MA30 has also moved up, so it was 13,677. MLP for today is somewhere around here at 13,845. So overall, it's still all right. Pretty positive, okay? Pretty positive. All right, the MA30, now 200, bring it up. Now it's slightly higher, okay, 12,000. Okay, all right. So how about the Nasdaq? Now the Nasdaq today also a zebra formation. At the moment now, there is a strong KCB at 13,992. It was almost challenged last Friday, missed by 1 point before it pulled back. So overall, it looks okay. All right, KSI is red though, but it's decreasing, so that means the buying is still in the market. All right. S&P 500. Now, S&P 500 interesting. It's created a very interesting double top in a way. The first high was at 41.92. The second high also is slightly higher, 41.94. So the market touched the high. Last Friday was a new all-time high, and that's why we have the 5% mark is at 39.84. But the MA30 is at 41.02 level, right? 41.02 level. So traders, do watch out for this point as a first support, okay? This point I write down for you. You can take note of that. This point is 41.02 level. So if S&P do pull back, this could be a level watch out for potential upside. Okay. All right. So that is the S&P chart right now. Okay. Let's look at Hong Kong. Okay, Hong Kong. All right. First of all, let's China A50 first. Now, China A50 has traded. It has gapped down a little bit. So I just take out the lines first, just show it to you the demographic of this. Now, first of all, China A50 today, the market now is trading a bit lower. The MA 200 is at 17,405. The MLP for today is somewhere here, and that's 17,280. And the MA 30 is somewhere here at 17,177. So in short itself, right, the first support today is 17,405, which I suspect it may touch later on. Okay, now there is some pullback on the Dow at the moment, so it is possible to see something like this happening. Okay, it is possible to pull back, but if the market can get self-supported MLP, I suspect that the upside may continue. All right, there's ongoing rumors saying that, right, the funds are going to go into China market because US is a bit high, right, and China is a bit cheap, right? So there's funds saying that it may go towards that level. So this one is what people say. I'm just informing you what I hear in the market. Okay. Now for Hong Kong today, let's take a look. Oh, sorry, wrong chart. Now Hong Kong last Friday, wow, went ballistic, right? I told you guys, Hong Kong, if it stays above the MA 30, okay, let me show it to you. You can see now, right? This is the MA 30 on Friday. And when I told you guys, when the market broke above MA 30, the Hang Seng will go up, and Hang Seng really went up, right? The MLP on Thursday was here. So again, it was a double buy up, break MLP and break MA 30. It was a buy. Now for today, the MA 30 will be the MLP, sorry, will be somewhere around here at 28,919. So unless there's some drastic selling in China A50, if not, I do suspect that they'll be buying somewhere around here. So I suspect that later on, if market pull back, there should be some buying at about 28,920 level. Now I suspect that that will be a level to watch out for the market to do any form rebound. But unless something seriously happens, then break down the MLP, then we have to relook at the whole thing again. But at least for now, I suspect that later on, we do see some support at 28,920 level for the Hang Seng. Okay, 28,920. Okay, cool. Okay, now how about DAX? Well, DAX, you can see very powerful MA, right? The last time we see this was on last Wednesday, the market touches MA 30 and rebounded. All right, so today we suspect that the MA 30 will be revisited again. Now today MA 30 will be somewhere around 15,142. All right, MLP wise, we're somewhere around here. And of course, the two blue lines are the nearest BNB. So that means that we do expect to see the DAX will be somewhere, stuck at a range, because last Friday it was really stuck in between the two blue lines. You can see perfectly it touches the blue line top and bottom at the same time. So today I also suspect that DAX will be somewhere pacing around this area here, unless there's some form of liquidity added. If not, we should see some sideways movement for DAX today. Okay, so that is the US equity market. All right, look at China A50 again. All right, some still not moving much, because the cash market is not open yet, right? 9:30, then the cash market open. Okay, so let's continue. All right, let's look at gold. Now, gold, basically, this is another entire week chart. So gold was at a high of 1795 area, then it tripped all the way down to 1772 level, and now gold is recovering a little bit. Now, the news-wise is that right now, Palladium has broke to new record high. I told you guys, Palladium will see new all-time high. It really, really happened. And of course, with that, right, gold also buying into that. Okay, now there is some rumors saying that, right, because the bonds are buying up again, right? So they expect that there's a, economy going to do well. And in case there's inflation, so they're going to buy into the gold too at the same time. And I did tell you, right, the China market, the Chinese government, right, apparently seem to be buying a lot of gold recently, right? Not too sure they're doing for, but there's a suspect that it may be using it to basically hold, to back up their digital yuan. So we are not too sure exactly what's going on, but there is some form of buying. Now, do note we're having a FOMC this coming Wednesday, right? So of course, usually when that happens, gold usually get a bit jittery. So let's see gold as we trade towards Wednesday. Okay, so let's look at the gold market as of yet on Friday. So gold opens here, okay, and you can see that it's below P2, right? Now the KSI is green, so we do know that it will not end at day low usually. And if the market touches P2 and pull back, it's a sell. If it breaks below OP, it's a confirmed sell, right? So what do we see? We see exactly what it's supposed to do. So let me just show you now what happened on Friday. So on Friday, the market was sideways initially, okay, pretty sideways, not moving, and then the momentum kicked in when you can see the CCRY came in with a KCX at the bottom. Okay, that was the first sign. Now, what was incredible was that slowly the gold went up. All right, it went up, right? And it went to pivot 2. Now, pivot 2, we know that it's actually that if the market goes above pivot 2, it'll be a buy. But of course, if there's no color change, so we'll wait for a while. Now, what was scary was this guy here. Can you see this? This is a BMB. Now, this is a BMB that comes with a CCYR at the pivot 2. Wow, this is classic. Now, this is a color change at pivot. By itself is very strong. Then followed by a BMB at the same time. And of course, the KSI also turned red later and the blue bar extended down. So with all these things come in, we know that gold will have to come down. And truth be told, it came down all the way, missed KTR -2 by a fraction of it before rebounding. But the point is this, look at it. BMB with color change at pivot is always the strongest. And I said this many times. So that's why the whole day, if you don't trade, it's fine. But this trade, you shouldn't miss. And of course, I did also saw my PTP student, one of the PTT trader. They also reminded you, right, that there's a KSL special technique level at about 1793 or 92, I can't remember exactly. And it was a very important technical level where the market failed to go up, right, and come down, right? This way you can sell. And indeed, from the level that we call for sell, the gold came down all the way, right, to 1770. So which means that there were $20 profit just using the KSL method. KSL is a PTP technique method, right? If you think that this is intriguing, do spot out for all the TTT whenever when they explain to you there's a KSL trade, right? Watch out for this 3-letter word, okay? KSL, all right? Watch out for that. Okay, time check now is 9:09. We're still a bit early, so let's continue our gold analysis first. Okay, hold on, sorry. Now, gold, basically, if you look at the channel that I draw, it has actually, still not showing us that type of, majestic upside. There's a pullback last few days, right? So now it seems to be, it's gonna basically coming to get yourself supported at about 1772 level, right? As of today, right now, you can see gold is still okay, recovering again. And the MLP for today is somewhere around here, which is now being triggered at about 1780. The MLP is about 1780 level. So it's now basically touching it right now, okay? So if the market can climb above 1780, gold will go higher again. If gold get resisted at 1780, I suspect that the support will come back down again to 1770. So these two numbers will be the level that I think that gold will be toying around for this period of time. Now, do note, whenever there's FOMC meeting, usually the week itself, the market before that day will be a bit slower. So traders, you just need to make note of that. That's something to watch out for. But overall, now we see that it's above MA 30, but it's below MA 200, right? So it's going to be sideways. It's not really a full-fledged buy yet, but it's definitely leaning towards the buy side, okay? Overall, at the moment right now for gold, okay? It's definitely leaning towards the buy side. Weekly chart-wise, right, we can see that something has incredibly happened. Now, although the market broke is the trend line that I draw last 3 weeks ago, all right, but eventually the closing was still within the channel, the downtrend triangle. So now we are having gold trading above. So let's see how it goes. But if end of the day, if it still ended below the opening price, then of course traders, you need to watch out for this. But overall itself, right, because it's staying above 1762 and that's a 50% mark, I still kind of suspect that, right, if gold can have a little bit of push, by touching here again and then stabilize, it may really test this point here later on. And that is about 1840 range. Okay, that's about 1840 range. So my personal take is this: if gold can come down and find some support at about 1762, will be a good idea. And then the next round will be going for 1840. But of course, if gold basically couldn't go higher and pull back into the channel, then of course, then 1689 will still be the level for me to look for buying. So traders, please make sure that you write down these numbers. Okay, these three numbers. Support will be 1762, upside 1840, ultimate support at 1689. Now, over the week, I received several text messages asking me, Cal, where do you think that gold will come down or not? I said this many times before. Fundamentally, right? Fundamentally, if the US yield, 10-year yields go up, right, it will add pressure on gold. Gold will likely come down. But you can also see that, right? Even though now the yields has not really in the interest of traders now. So that's why overall you can see that gold generally is trading higher now. So all I can say is if the gold do come down to 1689, it'll be a very good time to look for buy. If we go to 1762, it's supposed to be supported. Watch there. It could be a turning point. And 1840 will be the mid resistance point for time being. All right, 1840. Okay, so I give you 3 levels to watch out for. Hopefully you were able to benefit of it. Wow, we're 100 people of you right now. Okay, cool. All right, silver. Now, silver also had the same fate as gold, right? It went up recently, and now it's pulling back. But as of today, it's trading above MLP, so it seems to be okay. Now, for gold, for silver, it's above the 2 lines, above MA30 and above MA200. So overall looks positive, and it also broke my trend line. So that's why it's all looks good. Now I can draw one more just for the sake of drawing it. Okay, like this. You can see right now is the reason why there's some form of resistance at this moment for silver. But I suspect that once the fundamental of gold finish itself, then the upside may really come for silver and gold. All right. Okay, so Hang Seng is going to open pretty soon right now. We're going to go to Hang Seng to stand by. Okay, Hang Seng will likely gap down a little bit first, in my opinion, gap down a little bit. Then after that, likely the push up is possible. Okay, so traders, Hang Seng is going to open very soon. Please be on standby now. Okay, a few more seconds, Hang Seng will be opening. Then we can see the new pivot level. Then we see how do we react from down there. Okay, 5 seconds now. Okay, indeed, Hang Seng has gapped down a little bit. The closing price of on last Friday was at 29,112. This morning, Hang Seng opened at 29,094. So for today, well, it still looks positive. All right, the opening price for Hang Seng is at 29,094, right? KSI is green in color, although it's lowering a little bit, but still okay. So as long as Hang Seng stays above OP, we should see upside. But there is a KCB at 29,152 that will pose some resistance for today. So if the Hang Seng can cross 29,152, I suspect Hang Seng will be able to touch this point, and that's 29,312. Okay, now that is the level to watch out for. But of course, if let's say the market start to sell ahead of the FOMC, then the downside today will be at 28,900 level. All right. Now that is somewhere very near to the MLP, right? So I do suspect that the Hang Seng may just pull down to the MLP to the pivot 2 first, just for this morning before it may recover again. So this is my personal suspect. Like I can be wrong on this, so just watch out for that. Okay. So traders, do take note of that. Okay. All right, Ken. All right, so that is my view on Hang Seng. So watch out for 28,900. That should be a pretty good level for some support for the Hang Seng. Okay. All right, I received a lot of messages coming in again. Yeah, guys, I'm doing my MAO. Okay. Yeah. So just take note of that, Just don't get yourself affected by this. Okay, so that is the Hang Seng. All right, at the moment, let's cross right into the China A50 once again. All right, so China 50 is pulling back a little bit. That's why you see some movement there. Now, a friend of mine been asking me, say, Kel, the thing is this, right? I mean, the market is still very, very strong, right? What could really bring the market down? And I said this many times already. The only thing that can bring the market down, it has to be a black swan or someone make a mistake and created a sudden flash crash, okay, something like that. Now, why do I say that, right? If you actually look into history, okay, that's only out of the box history, okay? Now, the thing is this, if you look back 10 years ago, right, 11 years ago, 11 years ago this time today, all right, apparently, not this time, sorry, this day, actually, 26th of April, 10 years ago, apparently it's all right. One person actually went in and put an order in wrongly and created a flash crash on that day. And of course, that time the Dow Jones was slamming down very fast. There was no reason for that. It just happened. Now, I'm not saying that it will happen, but I'm just sharing with you what could happen to bring to the market to that level. Because there's no other reason why the market will have to sell, because everything is good, right? Everything is lovely. Everything is good. There's no reason for the market to come down. So it has to be something really Mother Nature or a human error. All right. So that's why I say that, right? I don't know whether such thing will happen. Please, I'm not a fortune teller, but I'm just informing you that what can happen, right? When people asking me this sort of question. Okay. All right. Okay. So I'm done with the gold and silver and stuff like that. So which means that I've covered everything. Okay. I'll really very fast, right? MAO. Okay, guys. I come to the this part here. All right. The Bitcoin and cryptocurrency will be in the afternoon. So now we're going to go into our alternate market views. All right. So if you are comfortable to stay on for the alternate market views, you stay on. If you think that you're heard enough for today, you're fine with it, you can actually choose to leave right now. Again, I give you 10 seconds to make a decision. All right. I'll come back in 10 seconds time. All right, guys, I'm back here again. I'm not too sure you're here or not, but I know that about 88 of you guys are here. All right, so that's out of 100, right? So 12 left, I think. Okay, whatever it is, no problem. My job is just to tell you what I see from the market. Now, of course, alternate market views is always on the opposite side. So if the market now is bullish, I'll talk about bearish at the moment. If the market is bearish now, I'll talk about bullishness later. So that's why that's how we mean by alternate market views. Okay, so let's just continue. Now, this is a very interesting video that I love. And now it's basically some hawks will actually purposely, they put some corns and maize on the floor, on the ground. And then the hawks came in and they did this very booby trap that basically is a sound sensor and it's actually electronic controlled by a handphone. Okay. So what happened is that when the hawks are all inside having their grazing, then that's where the cage came down and then captured everyone. Okay. So what I'm trying to say is this is what I meant by bait. The bait is money. You put money on the ground, eventually people saw it and more people will come on. And then once they are in, they don't know the environment is actually a trap. And when that happens, bang, they get trapped. Okay, so that is my point here that I want to show you through this picture. So why do I want to say that again? Because I want to inform you that now the record fund inflows, we saw more equity inflows in the past 5 months, is more than the 12 years combined. I repeat, the last 5 months, total amount of inflows is more than the last 12 years combined. Oh my God. It's a global equity flows. Look at it. This is really, really incredible, right? So that is the reason why when so many people are on one side of the track, you just have to be very, very careful. And of course, you look at the last 16 years. Okay, last 16 years, this is from Bank of America Securities. The latest weekly burst of stock buying pushed Bank of America private clients to a total of 3.2 trillion in AUM, asset under management, which is a record 64.3% in stock, 18.1 in debt, and 11.3 in cash. So which means that we're talking about almost 90% of the money is put into something considered risky. All right, not say 100% risky, but consider that it's not in cash. So 90%, about 90%, 89.7 to be precise. So the bank high net worth clients are buying financial energies and the high yields, selling healthcare and gold. So they are actually taking this. But now you look at it, my friends, look at it, right? They are buying financials, which Warren Buffett is selling. Buying energy is right. That one's okay, similar. But they are actually selling away healthcare, but with the pandemic is still ongoing. And gold is coming up, right? Gold is coming up, but yet they're selling. So this tells you that, right, they are selling things that's going up, buying things that is went up. So of course, with the history has proven, the average mode or average medium level whereby the market will hit a peak, right? The last time was back in 2008 at 56%, back before the Lehman Brothers collapse. Then in 2016 is the taper tantrum. And now we are even higher at 64.3%. So seriously, it's a bet against time. If you think that the market may see a pullback of general speaking, right? We're talking about big crashes. We're talking about just reasonable 4 to 8%. In my opinion, it is very possible. Very, very possible. And of course, if you talk about fundamental analysis, in a way, the credit spread at the floor or long-term ranges, the US trailing PE ratio now is at 29 times, more than the 15-time average for the last 100 years. So 120 years history tell you that, right, the forward earnings is average about 15, norm is about 22, and now we are 29.3. So again, we are at a very, very high level. So the forward and the trailing are all at 22 to 29, and we are now at 29.3. So this is something very scary, and this comes from the Bank of America US equity broking company. So you know that it's not from from YouTubers, not they self-created it, neither is myself doing that. It's actually done by boys telling you. So of course, if you send this to any of the high net worth clients, and if you're still buying, right, it's because of momentum. So of course, history, is it a good reminder? Well, I leave it to you to decide. Like I say, right, you make your own decision. My job is to just inform you. Now, this is something interesting. I don't know about this, but I can't find our mainstream media yet. The Great Taper. So Bank of Canada begins the Great Tapering. Yeah, apparently Bank of Canada is actually doing some tapering. And now the big four central bank like US, ECB, BOJ, and BOE, they also forecast that they might be reducing their they're reducing their credit availability soon, and they will reduce it down all the way to 2022. Now it's about 8.5 trillion. They are saying that they will reduce it to 0.4 trillion. I don't believe this, honestly. It's so much, all right? So if they do that, this is what will happen. Obviously, the market will not take it, because if they reduce this itself, right, the one that's pushing the market is all this extra money. So I'm going to leave it down there, but you can see and go and search for yourself under Bank of America Global Research under Bloomberg. Okay, so this is something very unique. I don't really believe in that. But look at it now. They're looking at quarter 2 to start to hit the high. So they're trying to say that they're still going to push up the market first for next 2 months until June, July, and then they'll taper. So maybe you look at it from this point of view, the market will still go higher. But if the market knows that you're going to taper so much later on, right, market may actually say, okay, you know what, let's just go slow now. So there's a positive, there's a negative flip here. So you have to make your own decision, okay? Now the VIX indicator shows something very interesting. Every time when it hit about 17 itself, right, the market will actually bottom out for a while and then went up. So are we at 17 again? Yeah, we are. So does it mean that the market will go, the VIX indicator will go up higher? It is possible. And it also means that, right, there is a possibility that the equity market will actually be coming off. So again, you just take note of that. And this is the 10-year yields. You can see that they've been very tight range over the last few days. So to me, when this thing go tight yields, right, it's either that because someone knows that something going to happen soon, or because it's all waiting for FOMC meeting to have a clearer position. So to me, is that, right, when it consolidated for 3 days already, right, you just have to watch this very carefully. If the market just go into a ballistic move, you know that it could actually represent something. Okay, so watch this very closely, my friend. This is very important. And the last one, all right, this is the one that I really want you to take note of this. Look at it, my friends. This is for the last 15 years of insider trading. Now, I want you to just take note of this. I'm not insinuating anything. The last time we see the insider was at the highest in terms of selling, the market still went up first for a couple of months before the market came off. Okay, so this one must take note of. The last time we see something of such a high magnitude, it was back in 2014, but the market went higher by a few more months, in fact, year before the market come out. So this is not really that accurate. And of course, it also had again, and the market surged up higher. So it's not accurate, all right, in a way, all right? But again and again and again, all right, now we are not even near accurate. We're talking about, wow, look at the magnitude. It is the incredible magnitude because retailers are now buying, right, into the surging economics, but the insiders are cashing out. They are cashing out. Okay, cashing out, wrong word. Okay, cashing out, okay, from the market. They are cashing out. So let me just change it. Go on. Okay, they're really cashing out from the market. So that's why I believe that, right, traders, you need to be very, very careful on this because the market, right, seemingly a little bit way too scary on this point here. So guys, I don't know how you see from this. If your personal take is that to be very careful, I think that's a very good idea because really in the last 14 years history, even with Lehman Brothers to tapering, we have never seen the insiders cashing out so much at all while the market is surging. So traders, you need to be very careful. This could be useful for you, and I hope that you like it. Now tomorrow there'll be more stuff like this of sort during our Super Tuesday. All right. So let's quick a quick look at the market right now. Oh, China A50 has rebounded. So Hang Seng, I suspect, has also went up also. Yeah, indeed, Hang Seng has also went up. So guys, so the market seemingly is still pretty positive at this very moment. Okay. All right, guys, thank you so much for today. I have finished my MAO. I hope that you guys like my sharing. And of course, I wish you all the best. And I'll see you guys at 2 p.m. later for our afternoon MAO. All right. This is Cal signing off. Take care. Have a great day. Bye-bye. All right. See you later.